Hey everybody, I have done the impossible. I got Tyler Crowe to agree to do a second SoFi video, and we are going to do that right now. We're going to look forward to 2025 and see where the company might be headed, what unanswered questions we might have, and things like that. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work we're doing. Again, fool.com/Frankel. So, Tyler's joining me. Before we dive in, I want to quickly share my screen, and I'm on a different computer, so bear with me. It might take just a second. Let's see. There it is. Hopefully, everybody can see this. If it's, I know it's small print, so I'm going to kind of give you the high level overview of it. So this is just kind of a quick overview of where SoFi shares or SoFi stands now. There are roughly 9.4 million members in SoFi's ecosystem. That is 35% more than a year ago. They added 756,000 in the most recent quarter alone. And just for context, at the beginning of 2020, SoFi had just over 1 million members. So it's roughly 9x from its beginning of 2020 level. Now, a lot has happened in that time. At 2020, where you see that chart start, SoFi was not a bank. They only got their banking charter at the beginning of 2022. So here is where they got their banking charter. Before that, they were a lending company for the most part. They started out life as a student loan company. They went into personal loans. They've since added mortgage loans. But now they are a fully functional bank. They have checking and savings accounts. In full disclosure, SoFi is my bank. They also have investment accounts, a few other products that are available through their website. So when you see the number of products here, 13 million, roughly 13.7 million total products. That include, like, a product would be if you had a brokerage account with SoFi or if you had a personal loan. So each of those is a product. They have the Galileo FinTech platform, which aims to be, quote, the AWS of FinTech. I always get very suspicious when someone says we're going to be the blank of some industry. So take that with a grain of salt, but this is kind of the financial infrastructure platform. 160 million accounts use it, so pretty successful so far. So that was an acquisition by SoFi a few years ago. Now you can see most of the products are financial services, which is kind of where it took off after SoFi got the banking license. 11.8 million are financial service products, about 1.9 million loans on the books. And that's kind of where SoFi stands today. So I'll go ahead and start with just some kind of things that I am looking forward to in 2025. I believe that the growth momentum will continue. SoFi has done a great job of growing its ecosystem. We can argue all we want about the acquisition cost, which is admittedly a problem. SoFi offers pretty hefty bonuses to get people to sign up for bank accounts and brokerage accounts and credit cards and things like that. But I think I mentioned right now we're at about 9.3 million members. I think that will get toward about 12 million by the end of 2025. Roughly 30% year over year growth is what I'm targeting, which would actually be a deceleration, but I think it's entirely possible. And there are a few things I'd like to see them do better, but I'll get to that in a second. So, Tyler, are you becoming more of a SoFi believer these days?
I see the growth. I see why people are excited about it. I'm not 100% convinced that all of this growth is translating into something other than just kind of collecting accounts. If you look at the actual profitability of the business, much of its profitability is in kind of the traditional banking sort of business, the net interest margin spread on the loans that it has outstanding relative to, what it's paying in deposits. A lot of these other ancillary things are not profit centers in any way. It's almost immaterial to their operating profits today. And so there is part of me that says, it's nice that they're collecting accounts. I hope to see that they can do something with them. Maybe once the customer is acquired, that that there's a little bit more of a sticky opportunity. The other question is how many of these accounts and features and all of these you know in additional products that are coming online are going to continue to be free products, or are they actually going to start coming with service fees attached to them? Because once you get somebody into a system and start actually attaching fees to it, then all of a sudden, having a strong user count actually really starts to make sense, and it will have been worth it in the long run. So kind of my big questions that I always seem to have with them is, you're collecting a lot of people, but outside of your kind of conventional banking, it hasn't translated into anything. And then on the net interest, kind of the traditional banking side, I've mentioned this before, but the loan portfolio does kind of push the risk spectrum a little bit more than you see than like a Bank of America or JP Morgan, where it's like mortgages and corporate loans and things like that tend to be much lower risk than personal loans, kind of those uncollateralized debts that have higher interest rates but tend to have slightly higher default rates. It's good when it's good, but when you have a credit crunch or a credit down cycle for consumers, the kind of the risk spectrum that they've put themselves on can go sideways a little bit. I've used it before, but Capital One is kind of an example that I use here because they are a bank that uses a lot of credit cards, and personal credit card debt, it tends to be higher margin, higher risk spectrum. And when you have a credit event, just look at Capital One's stock the price over the long term. When you have a credit event, things can go south pretty quickly. And so those are kind of my hesitations for it, is we haven't seen a down credit event for this business, and they haven't really been able to translate these accounts into anything significant outside of its banking business.
Yeah, no, you make some really good points. There are some unanswered questions that I have that I'm watching. I do think SoFi could be a big winner of the incoming administration in terms of lower regulations in the banking industry, which are widely expected, and benefit smaller banks, and lower corporate taxes is another big potential tailwind. But there are some questions I have. I already mentioned the acquisition cost. I'd like to get them to get that lower. I'd like to see them ramp up their cross selling. I think the numbers I gave you earlier, the average SoFi member has fewer than 1.5 products with the bank, meaning that the average person only has one thing, like a personal loan or a bank account or something like that. I'd like to see them do a much better job. Some of the big banks like Bank of America and Wells Fargo have that number's over 4 products per the average customer. I'd like to see them do a better job with that, especially with some of the bonuses they offer and things like that. The investment platform is building out, but I want to see if it can really be a competitor with Robinhood and some of the other app-based platforms. I think the technology is just as good, but it remains to be seen if it actually grows to that point. And the credit card business, talk about things that are are great when the economy's great, and not great when the economy's not doing great. Um, SoFi's credit card business is still very small. Only less than 3% of their members have a credit card with the company. They're rolling out a few new credit card products in the hopes of bumping that up. So that's something I'm going to be watching very carefully in 2025. But all in all, I think SoFi could be a winner of the environment. I think it will keep growing, and it'll be really interesting to see where it goes. But like Tyler said, it's not a risk-free stock by any means. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.